All right, so hi everyone. So welcome to today's webinar brought to you by Bursa Malaysia and managed by LifeChamp. So my name is Carmen and I will be your moderator for today. The topic for our session today is building a sustainable portfolio ESG investment strategies. And of course, before we proceed, just allow me to do a short disclaimer. So whatever that is shared in this session is mainly for educational purpose. By no means we're providing you any investment advice, so you are 100% liable for any decision you make. Okay, so today we are very honored to invite Miss Pauline Yong, the CEO of Sigma Wealth, to share with you on how to incorporate ESG aspect into building a sustainable portfolio. So a little bit about her. She is a licensed financial planner certified by the Malaysia Securities Commission Financial Planner Representative License and Bank Negara Financial Advisor Representative License. She's also a course trainer and public speaker at Financial Planning Association Malaysia and Bursa Malaysia. And she has over 25 years in education and has accumulated over 50,000 students and conducted over 200 large-scale corporate courses. Pauline is also the best-selling author who has published 6 books on investment and financial planning. Her articles has appeared in financial magazines such as Personal Money, Money Compass, and many more. So with that being said, let us welcome Miss Pauline to the floor.
Thank you, Carmen. Hello, good morning, everyone. Welcome. So let me share my screen and see if it's clear enough. Okay, so can you see my screen here?
Yes, we can.
Hey, thank you. Okay, so good morning, everyone. How's everybody? Okay, so today we are going to have a very interesting topic, and this topic is building a sustainable portfolio ESG investment strategy. So we are going to talk about ESG today. Okay, so let me share my screen further. Okay, so the agenda for today is we're going to look at the basic factors about ESG. Okay, what are the ESG factors, and then explore about the investment strategies, and how to build a portfolio, ESG aligned portfolio. And then last but not least will be the ETS tool. Okay, so that will be the last 15 minutes or so. Okay, so here we go. So what is ESG? Okay, so before I start, maybe I can ask you guys, how many of you when you go to the shopping, you will bring your own bag, groceries? Okay, when people ask, oh, do you need a bag? I said, no, I bring my own bag. Okay, how many of you are doing that on like a daily, okay? Like you go out and then you bring your own bag. Oh, that's good. Okay, very good. Okay, so it looks like mostly are the ladies, but some men are also doing that. That's very good. Okay, and then and how many of you are normally bring your own bag? Yeah, that's right. How many of you are already driving an EV car or seriously thinking about getting an EV car? Okay, how many of you are already driving an EV car or seriously thinking about driving the EV car? Oh, great. Okay, still thinking, can't afford yet. Yeah, a lot of us we see there are more and more these electric vehicles on the road, so there are some temptation for us to buy. Okay, but we'll see. Okay, we'll see how is it. Wait for the message to open market here. We already opened the market here. It's just that the charging station, maybe you are looking at the charging stations are not easily available. There are many types of EV cars, so perhaps you can go for the plug-in hybrid, whereby you can have the gas as well as the charging as well. Okay, anyway, so what is ESG? ESG investing is an approach to managing assets where investors explicitly incorporate the environmental, the social, and the governance sector. So the ESG stands for environmental, social, and governance factors in their investment decision. Okay, so we are looking at investing perspective. Okay, so today's session, we are looking from the investment perspective, and then we are looking at when we are going to select the stocks. Okay, some of you, if you are looking at funds, you can think about the funds, but for us, we are looking at the stocks. So when you're looking at the individual stocks, how are you going to make ensure that your portfolio is a ESG oriented. Okay, so this is what we're going to look at it today. So there are these three types of ESG factors. The first one is called the environmental factors. So whenever we look at the environmental factors, we are looking at something to do with the nature, okay, the natural world. And so this will be on renewable, non-renewable resources. So it will be something like water, mineral, ecosystem, and the biodiversity. And the social factors are looking at something to do with the human, okay, like human factors, and then the governance will be supervisory. Okay, so now I want you guys to type in the chat here. Okay, what are the possible environmental factors that you can think of? Okay, what are the possible environmental factors you can think of if, let's say, you are looking at the factors that may impact on the individual companies or the stocks or whatever. Okay, maybe you can say that reducing the GHG, greenhouse gases. Okay, so that is one factor. So you are looking at your effort and your whatever the companies that they're doing is to reduce the GHG. Okay, so that is one. Anybody? Anything else? Okay. Environmental factors. What could be some of the factors that you can see in the company itself? Because when you are buying into the stocks, right, if let's say you say, oh, I want to build an ESG portfolio. So if let's say you are building an ESG portfolio, you have to know what the company is doing. Okay, whether the company is doing something that is concerning about the environment. Okay, paperless. Well, yeah, this one, I think by default, everybody is doing that paperless. Okay. Any specific way that, for example, okay, I ask you, like Gamuda. And what does Gamuda do in terms of these environmental factors that, use solar energy? Somebody say something. Solar energy, renewable energy. Yes, very good. Okay, so if let's say you are trying to identify which company is doing something that is good for the environment, at least you want to see that they are using some renewable energy. Okay, and then they are also looking at reducing the carbon, the greenhouse gases, the carbon dioxide. Okay, and then they are trying to do a lot of things that they are trying to be friendly to the environment. Okay, so besides the water, right, there are also the besides the environment, there is also the water, which is the sea. A lot of people, they have focused so much on the forest, but they neglected on the water. So the water is the sea, and the sea are looking at the oil and gas. Okay, because the oil and gas, sometimes they will have the oil tanker that pollute the ocean, and that will cause some problem. Okay, now the social factor. This is especially important, especially last 2 years or last year, we saw a few of our public listed companies that were involved in this factor and that caused their share price to came down. Okay, so can you identify what kind of social factors that few companies were involved? Do you remember there was this incident whereby there were some news about a few companies whereby, yes, very good. Okay, employee welfare, that's right. Okay, the glove stocks, the glove counters, and they were looking at the not able to provide a good accommodation for the people, okay, for their workers. And some of them, they spotted that they have took away their passports. Okay, keep away their passport. They are not supposed to hold their passports. Okay, and then also not only the glove company, but also the technology company, like the chips company, also involved as well. Okay, so the employee welfare, how you treat your employees. Okay, so this is a social factors. And if let's say the company is has won an award, okay, the award for the best employers award. So if let's say this company has won the best employer award, right? Definitely this company is good. Okay. The people, the employees are very happy to work in this company, and then the most likely they're going to produce very good productivity, and then they can the whole company will make more money because the employees are very happy, and then and very effective, and very productive. Okay, because when you keep your employees happy, then they become very productive and efficient, and then they can make more money for the company. Okay, and of course that will also drive up the share price for the company as well. So these are all we are looking at the public listed companies. Okay, then the governance. What could be the governance factor? Okay, so the governance are looking at tied to the countries or jurisdictions or common practice in the industry. Okay, so can you think of any examples of whereby there is a public listed company whereby they have violated this governance factor, and then that caused the share price to came down? In our Bursa Malaysia, I don't think that we have, but in the US we do have. Okay, we do have some. Maybe in the later I will show you some of the examples. Okay. Okay, so these are the three main factors: environment, social, and the governance. Okay, so these are the examples: climate change, resource depletion, waste, pollution, deforestation. Especially when you are looking at the certain industry like oil and gas, plantation, maybe they will have more of this problem, okay, than other sectors. And then certain sectors like manufacturing sectors, those manufacturing where they need to hire a lot of workers, migrant workers or whatever, then they may be concerning about their social factors, okay? And the governance mostly are for the banking industries and some of the industry whereby it is more regulated, okay? I can think about the most is the banking industry, okay? Where you have all this. But of course, in across all the companies, we will come into this board diversity and structure. In fact, for our Bursa Malaysia, we encourage the board diversity to include more female board of directors as well. Okay, and all this. Okay. Okay, quiz. Okay, so now I'm going to quiz you. Do you know what is a green bond? Okay, who can tell me what is a green bond? Do you know what is a green bond? Anybody? Quiz. Too early to quiz? Okay. Okay. Bond in ESG, very good. Okay. So which means that when people look at green bonds, you look at the word green. Green means something to do with environment. Okay. And so something, if let's say you are looking at okay, recycle, okay, reuse, recycle, the 3 R's, reduce, reuse, recycle, okay, the 3 R's. Okay, so anything because the bonds means lending, right? You need to borrow money. So when you combine these two words together, means that you need to borrow money to fund the green projects. Okay, so whenever you see something like the green bonds, so it means that it is a funding exercise whereby the company need to borrow money and then to fund the green projects. Now, in many of the banks, they have a quota. So every year they have certain billions of a quota to fund all these projects, so that to help this company to transition to a greener operation in their business operation. Okay. Okay, good. So the next one, what is blue economy? Just now we have the green, now we have the blue. So what is blue economy? Does government grants include in green bonds? Yes. Government have provided the most grants in the green projects. We don't call green bonds, but we call green projects. Yeah, government subsidies in the green projects. Yes. plenty. Okay, the LRT, the highway, we have many. Okay. Okay. Blue ocean where everyone benefit. Well, when you say blue ocean where everyone, well, okay, I got what you mean. So we are looking at blue as in the ocean, right? So we are looking at the ocean, the life of, I mean the sea. Okay, we are looking at the sea. Yes, that's right, the ocean ecosystem. Okay, so we are looking at the ocean ecosystem whereby we want to prevent pollution in the ocean. The green means that we want to prevent pollution in the forest and in the environment. So the blue means that we want to look at taking care of the life, the marine life, okay, the marine life, and then we want to protect the ocean so that we do not want to see pollution, the sea pollution, okay? So that is called the blue economy. Now, the next one is the greenwashing. How many of you know what is a greenwashing? Does anybody know what's a greenwashing? This one is a bit tough, right? Very good. Osman, you're right. False claim. Okay, so I'm going to show you some pictures. Now, I'm sure when you go shopping, you see a lot of all this packaging, right? Oh, we are eco-friendly. We are 100% net zero carbon. Okay, we are 100% this and that. Okay, so when they say that they are this and that, they have all this kind of a claim, right? Have to be careful, okay? Because some of them, they are not. Okay, so these are marketing gimmicks. So we have to be careful that we do not fall into the marketing gimmicks, and then we think that this company is doing something good, but in fact they are not good. And then we buy something and then we see the packaging. Oh, this packaging is green. So we think that this company is pro-environment, but in fact they are not. Okay. So sometimes you see that there are all the logo, they say that eco-friendly, ocean-friendly, all this. Okay, but then they are not. They just put a logo, simply just put a logo on the packaging. And sometimes they change the packaging to green color. And then when you see some green color packaging, then you think that, oh, this is eco-friendly, eco-friendly. Okay, but they may not be. Okay. Include big boys are greenwashing. Well, some are genuine. Okay, I would say that some are genuine. Okay, so I'm going to share with you. That's why we have the annual reports. Now, in our annual reports, right, it is mandatory for all the public listed companies to have a sustainability report. So I'm going to show you Pardini. Pardini 2022 and then Pardini 2023 annual reports. So you see the difference, okay? So Pardini 2022 annual reports, although you see annual reports and sustainability report, so this is mandatory, okay? That you need to include a sustainability report for all the public listed company. So now when you are reading the annual reports, you have to scroll down, and then normally when we are looking at the annual reports, we look at all these management discussion and everything, right? So besides the management discussion, now you have one more thing, which is the sustainability report. So you can see that this is the highlights, okay? So sustainability highlights. And in 2022, Pardini only have one page, okay, one page of the sustainability highlight, and then the rest are corporate governance overview statement and things like that. But if you are looking at, hey, what this company is doing in terms of the sustainability, because every company now you have to publish this sustainability, meaning that you need to tell your shareholders what you have done in terms of in terms of the ESG effort, okay, what you have done. So in here, Pardini in 2022 annual reports come up with a one page of a highlight, okay? So then you see that, okay, we have donated 3,500 cartons of clothing. We have donate in cash 574,000 in cash in kind has been donated. We have attended all this policy training, and then we have the bags are biodegradable and all this employee benefit. Okay, so you can see that they are doing this. Now that was 2022. Okay, so here I'm going to show you 2023. So 2023, wow, very nice, very colorful. Okay, we scroll down. Okay, oh, nice. Okay, then we scroll down. So you can see that it's a big improvement in their annual reports. These are their milestones. Okay, scroll down. You scroll down further. And then you can see that the non-financial highlights. So these are the non-financial highlights, meaning that these are the sustainability, okay, what they have done that benefit the communities as a whole. Okay, so these are in summary, they have done all these good deeds. But if you to scroll down, okay, so and then you see that they have about close to 200 pages. Before they were only 100 plus pages, so they have doubled up the number of pages for to include the sustainability report. So, and then this is the management discussion and analysis, which we are not going to look at it. We just scroll down, and then I just want to show you their sustainability report. Okay. Our model, okay? So here, our value creation model. So if you to look at the value creation model, right? So you see that they have done quite a bit on the ESG factors. Okay. So, and then it is very, very specific already. So when they say that they want to do something, and then what is the outcome? Okay, and then they are even more specific in terms of the numbers. So for example, the material matters, okay, the economic and our concern. So then this is their effort. Okay, so then they said that, okay, we have established risk management committee to review the asset and to assess the risk areas. And then they have also looked at the different. So this effort is the things that we want to look at as a shareholders, because this will address in details what they have done for their concern. And then the concern can be financial concern or non-financial concern. And the non-financial concern part will be the sustainability part, the ESG part. Okay, so here you have the environment. So then environment, it will be looking at ESG particularly. So then you have to see that what they have done. So we have engaged our suppliers to promote responsible sourcing practices, such as using organic cotton and recycled polyesters to minimize the environment impact. So you see, they have even sourced their suppliers to be green suppliers as well. So the suppliers has to be green, so that then you can become my supplier. Okay, just like Gamuda. Gamuda also have a very strict requirement on their suppliers. So the suppliers has to be green, because Gamuda declared themselves as a scope 2. Scope 2, so in each of these category, you have the scope 1, scope 2, and scope 3. So scope 1 means that if let's say you declare your company as a scope 1 practice, meaning that your company is doing your operation that fulfill the environment, that is care for the environment. Okay, so it's only from your business operation. But Gamuda is the scope 2. Scope 2 means that you extend to your suppliers, you extend to your customers, you extend to your employees. So not only your operation side, it has to be ESG, but your employees. Okay, you have to tell your employees that to be care for the environment. Okay, and then you have to also let your supplier know that you are requiring them to do certain things that so that fulfill your green principles. Okay, so then your suppliers and your employees all have to fulfill your principles, your ESG principles, so that then they can be working for you, and then they can be having your business. So then this is a scope 2, and then scope 3 will be even bigger. So that will be your customers, and then your customers, and then friends, and it's a bigger. So nobody can yet declare that they are scope 3. Okay, so if you can declare they are scope 2 is very, very good. But normally scope 1 is the basic, okay, of being a sustainable business practice. So here you are looking at the here we have a lot of, and they are very detailed. Okay, so as you scroll down, you can see that what are the things that they have done. Okay, sustainability journey. So they effort to reduce the greenhouse gases. So you can see that they have transition, okay, for solar system installation as well. Okay, and it's actively looking for sourcing on data collection on the greenhouse gas emission as well. Okay, so they have all this effort. So you can see that it is 180-degree or 380-degree change from the 2022 annual reports to the 2023 annual reports. So here they even tell you that in 2023, right, Bhd produced approximately 395,700 units of eco-friendly garments and footwears to be sold, which makes up to 0.6% of the total purchase. Okay, and then they have also recycled approximately 3,400 kilograms of used paper, plastic, and paper products in progress. Okay, so this is the thing that I want you guys to notice, which is statistics. Okay, so when you're looking at the sustainability report, right, try to highlight the statistics. So these are the statistics that I'm looking at. Okay, I don't want to see, oh, we are doing care for the environment, and then we you're just explaining what is the environmental factors and then things like that. You didn't tell us what your company has done. Okay, some of the sustainability report, I do not want to mention their names, but then if you to refer, you can see that they didn't tell you exactly what they did, but then they just tell you the theories of the ESG. So we are not going to look at the theories. We don't want to see what, all these things that already known to us. We want to see what the company has done. So then these are the things that the company has done, and then has to be in numbers, statistics. Okay, it's very, very specific. So when you are assessing a company on their annual reports, you have to look at the efforts, because nowadays everybody is looking at the ESG, and then all this, they have the rating as well. So the fund managers, when they are looking at what shares to buy, what stocks to buy, they are also looking at this sustainability report. So if you are able to produce a very, very impressive sustainability report, I'm sure you can be able to capture the attention of the fund managers, where the fund managers, maybe they will buy your shares. Okay, so and then I see that greenwashing. Okay, so Susilawati says that should be charged or to be penalized if they are giving misleading information. Correct. If you report them, they will be penalized. Okay, they will be fined. Okay, so but then you have to report them first now. Okay, so yeah, all this we can do on our part. And then Ang says that quantity do not represent quality. Yeah, correct. All low-hanging fruits, which area painting is different. Yeah, so meaning that when people are doing the ESG effort, right, we want to see that they are doing the quality, okay, and also what are the things that they are doing. Okay, so let's go back to my slides. So these are the greenwashing, and then these are the green bonds that are, if let's say the company, it could be corporate bonds, okay, it could be whatever. So if let's say you are raising some corporate bonds, then the bonds has to be, if it's a green bond, it has to be to fund your projects, okay, all these water management projects, renewable energy projects, sustainable housing project, all this. And then if you can say that, okay, we are the green loan, okay, so then the banks are very willing to lend you the green loan, because the banks also have the quota. Every year they have to loan out a number of this kind of a green for funding for these kind of a green projects. Okay, so next, responsible investment. So when we are doing the responsible investment, right, we have to incorporate the ESG factors into the investment decision. Okay, so meaning that we want to become responsible ourselves. Okay, not only the company have to be responsible, we have to be responsible, because when we are investing, according to those companies that are following closely with the ESG, and then they are able to provide benefit to the shareholders as well, because these companies statistically has actually shown that companies that are doing mostly favorable to the ESG factors, they are able to command higher share price. Okay, it has proven already statistically. So which means that if, let's say, you are investing as a shareholders, if you can identify those companies that are very put a lot of effort into the ESG effort, these companies are likely to appreciate in their share price. Okay, because the fund managers will buy, and then you will also benefit as a shareholders. So then we have to be responsible investment, as in we want to incorporate the ESG factors as well. Okay, so at a minimum, responsible investment consists of mitigating the risky ESG practices in order to protect value also. So which means that we may want to exclude, okay, we want to exclude some of the companies that are not doing certain things that are pro the ESG. Okay. Okay, so what are the strategies? So the first strategy here we are looking at is called negative screening. Negative screening means that we totally exclude, okay, exclude it. So for example, if you think if you think the oil and gas, okay, oil and gas is like you are exploring the ground underground, and then you are trying to you know, like also some pollution to the environment, and then it will cause damage to the environment. Okay, so if, let's say, you are looking at this oil and gas industry, so since that they are polluting to the environment, then you probably may say that, okay, and then also the risk of polluting the ocean. Let's say, for example, they have an oil tanker that run from transport from one place to another place, and then accidentally the oil tanker may have an accident and then may leak, and then the oil may leak to the ocean, and then that mitigation, that kind of a financial risk is huge, because people can sue you as a company. Imagine if, let's say, you have done some pollution to the community, okay? Everybody can sue you, okay? Just like if you are a drug company, and then if you have invented a drug that caused some, you know, life-damaging impact on the people can sue you. Okay, so these are all financial legal activity whereby you have very significant financial impact on you as a company. If, let's say, you didn't take care of the environment, you didn't take care of the social, and then you didn't take care of the governance, you didn't follow certain rules, and then you get violation, and then you get great fine. Okay, so for example, Binance. Okay, why did the Binance have great fine, or all the tech companies? Why all these tech companies, they have huge fines? We are talking about millions and tens of millions of fines, and that is because governance. Okay, all these technology companies, they are not following closely with the governance. So all these ESG, any of these factors will cause financial impact onto the company itself. So as a shareholders, we have to be very careful. Okay. Overly hype Johnson & Johnson on okay, supposed to be cancerous. Okay, overly hype. Well, I would say yes and no. No is because I would think that this is important, because when you are putting like the policy and rules and regulations onto the public listed companies, because public listed companies are very huge companies that have business all over the world. Okay, if not all over the world, but at least all over the country. So these are huge companies that they have a very significant impact on the social, okay, on the lives of the people. So if let's say they are not following the ESG, then we as a consumers, we will be affected, okay? And so these are all very big impact. Of course, the most direct impact will be the social, whereby it will be the customers directly. But if let's say there are certain impact like the environmental impact, this kind of impact, it could be like generations and generations later. So you may not find so like a so-called important, okay? Like what Warren Buffett say. Warren Buffett thinks that it is not so, he thinks that he didn't need to fulfill all the ESG reports, okay, and reporting, because he thinks that all this reporting is take a lot of his resources. And it depends, because to me, I find that out of this ESG, right, there are certain factors that are very, very important, and then it will cause a direct impact on your financial. Okay, for example, the governance and the social, these two, because this governance is a direct impact. Okay, and then it will involve a heavy penalty if you are not careful. And then the social impact also important, because if you are not careful enough, the consumers, as a consumer, you can sue the company as well. And then the financial litigation is huge. Okay, you cannot imagine how huge is that. And the environmental is something that is slow, because the rules and regulations are still forming. So you wouldn't have see like a very direct impact, but then there are already rules and regulations forming. Okay, so mostly if you are looking at the litigation, financial, legal litigation, those are mostly from the social and the governance. Okay, and if you were to look at if there's any government who will fine a company for violating environmental rules, yes, there are, but it's mostly in the developed countries like Australia, EU countries, Canada, okay, maybe in US a bit less, but for developing countries, not so, okay. But if it's China, yes, definitely yes, okay. So you are seeing that the environmental effort depends on the country itself. Yeah, some countries are very stringent, so they will fine the company who has violated the environmental rules. Okay, so negative screening means that you want to exclude it completely. Exclude completely, so meaning that you do not want to have it at all in your portfolio, because you want to reduce the risk. If let's say you included a company like that may have potentially, okay, violated some governance rules or some social rules, then this will jeopardize your portfolio, because the share price, if it ever happened to that company, the share price will plunge. Okay, then your portfolio will be affected. Okay, so some company or some fund managers, right, they will exclude it completely. So it's called negative screening. So as investors, we can also do that. We can exclude it. Okay, so in your portfolio, you don't want to have these kind of sectors. Okay. Okay. So then the other opposite is the positive alignment or best in class. So this is the opposite. So just now we said exclude, right? So this one, it means include. So meaning that, hey, we see that this company is doing very well on the ESG effort. Okay, for example, okay, this particular company, they are Gamuda, okay? This Gamuda is actually, they are requiring their suppliers to be green. Okay, so this is a very, very, very much a green effort. And then another developing company, let's say ABC, okay, this developing country, they are actually asking all the employees to be looking at transition into driving an EV cars. So then this company will say that, okay, for all these our employees, if you are planning to buy an EV cars, our company is going to give you subsidies to buy the EV cars. Wow, so happy. Okay, so then all the employees all go for Tesla cars and BYD. These are all ESG effort, because the company is going for the scope 2. Okay. And then, for example, another company, this is a conglomerate. They are very strict in the environment issue. Okay. And then when you go to their conference, they strictly do not want you to see you drinking the mineral water from the water bottle, from the bottle mineral water. Strictly no. No bottled water. Okay, they do not want to see bottled water because the bottled water is in a plastic container. Okay, so some companies are like this, which is good. I mean, which shows that they are very committed to the ESG. Okay, can you name me some companies? Can you name me some companies are like that? How big is the company? Okay. That if let's say forcing, then you have to give subsidies now. Okay, cannot like ask us to pay so much money. Okay, plantation stocks always have issues with the ESG. How can they apply the ESG? So now the plantation company, they are very smart. They are doing renewable energy. Okay, so you can see that they have borrowed a lot of money from the bank to expand on the biomass division. So many of these plantations company like Sandrabi plantation, now is the Guthrie plantation, they are having biomass, okay, division, so that they have renewable energy. And some are slowly transiting into that, and which score very well in their ESG rating. So later I will show you the FTSE for Good ESG rating. And then you see that all these plantation companies, right, they have 3 stars. Okay, it's 2 or 3 stars, not bad. Okay. So can you name me some companies are doing very well in this kind of ESG effort? Like, you attend their function, you deal with them, yes, Insen, yes. Okay, Insen, yes. They have a lot of products on the ESG. Okay, what else? What else? Anything else? And some are very you as an employees, you have to be also very green as well. Sime Darby, yes. Sime Darby as a big conglomerate, and then all the Sime Darby subsidiaries all are like that. Okay. Yeah. Gamuda, yes. And in terms of the construction companies, right, you'll be surprised. They are quite ESG. Okay. That's because you see construction is a lot of pollution, right? So the more they have to be ESG because they don't want to cause so much of a damage to the environment. Besides the Gamuda is a Sunway. Okay, Sunway as a group and Sunway Construction. Very, very ESG. Yes, correct. Okay, so this is the top two, top two Gamuda and Sunway. Okay, so the bottled water is the Sunway. They are very, very green. Okay, I can tell you very, very green. Samdabi property. Yes, and you can see in their property development as well. Yeah, they the concept of the even the residential or commercial building is all ESG. Okay. Yeah. How about certain sectors? Okay, because if you are building a portfolio, you want to add some good stocks that has positive alignment in the ESG, right? You want to add some good stocks. So besides these kind of stocks, right? Can you think of a sector as a whole? Which sector as a whole they are mostly positive in terms of the ESG effort, the sector? Okay, like this individual, like the plantation and construction, and they are just individual. Their sector is not ESG. Their sector may be not good, but then their individual effort is very, very good. Okay. Healthcare. Okay, good. Healthcare. Okay, another one. Solar. Okay, solar energy. This company, of course, is already solar energy. Okay, yes, division. This is like a industry. Okay. Utilities, not so. Okay, utilities have to be careful because utilities, right? You have the coal and the renewable solar energy to power, right? So so far our solar energy to power is very little, not much. Okay, so very much they are still not very yeah, but they are doing a lot of effort already. Okay, solar energy. Hotels are not providing mineral water in plastic bottles anymore. Yeah, that's right. You see. Even the hotels are no longer in plastic bottle already. Okay, so our mindset has to change already. No longer plastic things already. Okay, we have huge potential in biomass. Yes, correct. Banks. Okay, yes, Maslan, banks. Yes, banks. Okay. The banks, normally they can score very well. So later I show you the FTSE for Good, the stars ratings, right? You can see the banks normally they are there. And some of the consumers also like that are there as well. Okay. Yes. So here you see that we are able to identify. Okay. So it is not hard. Okay, and then the norm-based screening applies existing normative framework. So certain framework, if let's say you see that from the annual reports, you see that, for example, one of the framework is this TFIC, okay, so which is looking at to reduce the greenhouse gases, and then to become a net zero carbon by certain years. Okay. Now, can anybody tell me in Malaysia, what is our target for net carbon zero? What is our target? 20, okay, I'll give you a clue. 2030, 2040, 2050, 2060. What is it? Yes, Osman, correct. 2050. Okay, so this is our target for net carbon zero. Now, so if let's say in the annual report, you see that the company is committed to follow all these so-called the norm-based effort. Okay, the norm-based effort that you have to able to come up with certain slogan. The slogan is that, oh, we have to be net carbon zero by 2050. We have to follow the Kyoto Protocol that we will reduce the temperature within minus 1.5 within the until 2050, you know. So certain things that are fulfilling all these international rules. Okay, so if let's say in your annual reports, you can see that our company are fulfilling this is all this, you name all these big names here. Okay, you name it there. Or we fulfill the KPI, you know, from the Kyoto Protocol, and then the UN Global Compact, and then all this. Okay, so which means that your at least your annual reports are quite good, quite impressive. Okay, quite impressive. Okay, so at least these are the certain things that you can try to extract from your annual reports. Okay. Okay. So there are a lot of things to do in I can talk a lot of ESG things, but anyway, I have to be fast a little bit so that we can have the ETS later. Okay, so here thematic. Okay, thematic investing targets sustainability aligned themes as a means to construct a portfolio. So some portfolio, they are thematic. Okay, so the theme is ESG theme. So if let's say you want to build a ESG portfolio, so then you will see that your portfolio itself is very thematic, which means that you are looking at clean energy, and then good water management system, and then looking at the healthcare, and then all this. So if let's say you are building a portfolio with all this green effort, right? So naturally you will include, okay, you can do these three things. You can exclude first. Exclude those sectors, industries that you think that you do not want, or exclude certain stocks that you do not want. Okay, you exclude. Then you can include some of the best practice of the ESG company in your stocks. So for example, Gamuda and Sunway, they are very good in the ESG effort. And then the banks, okay, the banks, you like it because they are very much ESG as well. And then certain consumer stocks, and then certain solar energy, certain healthcare, and then what else? Utilities because they are having a lot of solar energy. The biggest solar energy farm we have is Tenaga. Okay, they have the biggest solar energy farm. So we include all these. Okay, put, and then form a very nice ESG portfolio. that you have. And impact investing. So this impact investing, we're looking at the SDG goals. There are 1 to 17. So these are all you can go through by yourself, okay? Particularly in some of the company, in the individual company, right? They are looking at good health and well-being, okay? SDG goal number 3. And then they may be also looking at number 5, gender equality. And what else? Okay, if let's say you are a corporate, okay, which are the goals that you should see in the company that that are good company, fulfill the ESG? Number 5, and then there is also the decent work and economic growth, right? And sustainable cities and communities, and reduce inequalities, and responsible consumption and production, especially number 12. Okay, because if let's say we are not responsible in the production, the company, what can they do? They will probably throw the waste into the ocean. They don't care. They don't care how they throw the waste. They just throw it into the ocean. That is irresponsible production. Okay. Then as a consumer, we have to be responsible consuming as well. Okay, so when we go to grocery, we bring our own bag. Okay, and then when we drink water, we drink without the bottle. I mean the plastic bottle. We drink with the we bring our own bottle, and then we pour and then we drink. Okay, these are all responsible consumption. Okay. Okay, so let's look at the quantitative ESG analysis. So in terms of the ESG analysis, right, we are looking at quantitative and qualitative. So the quantitative, mostly we are looking at the ratings. Okay, so here I'm going to share with you the FTSE4Good ratings. So this one you can find, you can Google and then you can find. Okay, I share with you in the chat here. And this page here is all about our FTSE4Good Bursa Malaysia Index. So the methodology of how they come up with the ratings. So basically, they assess environment, social and governance, and these particular factors as well. Okay, and then they come up with the rating. So if you were to click, ratings can be accessed here. Okay, so if you were to click the ratings, you will come to this page. Okay, I will share with this PDF file. So this is our FTSE4Good, and the highest is four stars. Okay, the lowest is 1 star, and then some not even included. So here we have about 80 stocks here. Okay, not many are here, but about 80 stocks that have stars. At least you are included. That means you are quite good already. Okay, if you are included. So you may see that the consumers and the financials will be most of it. Okay, consumers and financial, a lot of consumers and financial, because these are the easy ones to be included. Okay, and then if you see the energy, this energy are not easy. Okay, if you are energy and then you are included, that means you must have done some very good something to do with the environment. For example, Bumi Armada score 4 stars. Okay, and they are from the oil and gas. So this is a very good rating for an oil and gas company. Okay, then plantation. Okay, plantation. You can see some of the plantation 2 stars, and some plantation 2 stars. Okay, let's see. Technologies are also here. Properties. Okay, properties. These are very good properties company. And construction also. Let's see our Sime Darby. Okay, Gamuda, 3 stars. Sdn Bhd, S L M N O P in alphabetical order. As okay, public bank, 3 stars, and Sdn Bhd, okay, 3 stars. Sdn Bhd property, also 3 stars. Okay. Southern Steel, 4 stars. So this one I'm a bit wondering how how the steel company can have a 4 star. Okay, interesting. Okay. Okay. So then you see that some of the ratings are quite interesting. Okay. But mostly the stars supposed to be showing that they have done a lot of effort in ESG. Okay. So you can scroll down and then you can have a look. Okay. So when you are building your portfolio, you may also look at these ratings as well. Okay. So these are the selection methodology. So they look at how much you have done. Okay. So maybe those 4 stars, they have done particularly a lot of effort on the supply chain environment. Okay. Okay. So next, the tools and the elements of the ESG. So sometimes besides the qualitative and the quantitative, right, we also look at what are the tools. The tools are like certain things that will alarm you. So for example, that help you to identify which company is not ESG oriented. Okay, so number one, red flag. Okay, red flag will be raised by the media or the Securities Commission or somebody in the public, like a customers or consumer, somebody raised something. Okay, so that can be a red flag. Okay, so suddenly somebody says, oh, this is it will cause I have after consuming this, I have some problem with my health. So then it's a red flag. Okay, so for instance, a company that has a board that lacks majority independence might be red flag, flag for deep scrutiny on management. So this kind of your sometimes in the public, if you are the shareholders, even if you are the minority shareholders, you can raise it up. So in an annual general meeting is for you to raise the questions up. So let's say you notice that the board of directorship is all male, okay, no female. So then you can raise it up and then you say that, okay, as a shareholders, I'm a bit concerned because your board of director has only not, only one gender. It's not, it's not equal. So can you explain? You ask them to explain. Can you explain why? Okay, so if let's say you notice that this company, they have done something that are not very good, and then so you just as a shareholders, you can always raise it during the annual general meeting, okay, the AGM. Okay, then there are also company questionnaires and management interviews to spot certain things as well. Okay, so but who can interview the management? Not many people can interview, except if let's say you are a reporters or you are something working in the media, and then maybe you can have the opportunity to interview them. But however, if let's say you are a research analyst also maybe you can have this opportunity, because if you are the research analyst, right, then they will answer to you. Okay, they may, in my experience, right, I think they will answer to you. So you may also post some questions or arrange a management review or whatever with the management. Okay, and they are able to cater to you, okay, if you are a research analyst. And sometimes you can also check with the outside experts. So for example, you may do questionnaire with the suppliers, and like check the suppliers, see how is this company is doing in terms of the ESG effort. Or you may check the banks, because the banks know the best. Okay, they know everything. So the bankers is like a information hub center. They know everything. So you can ask the bankers, maybe they know which company they are doing what. And then you can also conduct an internal ESG research as well. Okay, this may be a bit tough because as an outsider, you may not be able to do it. But maybe as a, if let's say, if you are within a company, maybe you can do it. Okay. Okay, next. So here we are coming to building a diversified and socially responsible investment portfolio. Okay, so we're going to look at how we can build a ESG, okay, portfolio. It has to be a diversified one. Sometimes when we are too focused on something, right, it can be not diversified enough. Okay, so this is a chart whereby you are looking at the performance. You're looking at two performance by looking at two rating agency. So this MSCI is one rating agency. The other rating agency is called the Sustainalytics. Okay, so we see these two rating agencies, and then how is the comparison of the performance difference? You see that there is a small difference there. Okay, both of these rating agencies, let's say you select your stocks based on the stars recommended by these two rating company, and then you see that the performance wise are more or less the same, which means that the European investment grades are basically outperform the US investment grade. Okay, because the European companies, they are more ESG oriented. I have to say, okay, if they are more ESG oriented than the US. So in general, the European, they are more perform better, but there are some overlap here, okay, and then some overlap here where this one doesn't have. So you can see that both are ESG rating company, okay. However, they do provide certain differences when comparing them. Just like when we are using the FTSE4Good as a rating agency, right? So then you may also think that some of the stars that recommended there, you may not agree. Okay, so that is the challenge part about all these rating agency. So the main challenge is in the whole ESG environment, assessment of the whole ESG thing, is the reliability of the data. It's the data itself. How reliable is your data? And a lot of time they cannot come to a conclusion because there are just too many ESG research companies in the world, and there are too many ESG principles and organization in the world as well. So this challenge is that you need to monitor, okay, across using different rating agencies as well as different ESG environmental organization. So you are actually looking at a lot of conflicts, okay, among them as well. So that is the biggest challenging part in the ESG environment. Okay, so then how do you ensure that your the source that you get is reliable? So sometimes you have to rely on your own research as well. Okay, so certain funds they don't entirely rely on the external third-party ESG data provider. They have their own research team, okay, because they want to find out from themselves as well. So all these are looking at the challenges in the ESG environment. But nevertheless, you can see that using the rating agencies can also provide some accurate performance indication as well. So there are 4 steps. Okay, 4 steps in building a ESG portfolio. Okay, step number 1, you must set your priority. Your priority can be, okay, I want to do this ESG portfolio because I want to reduce the carbon reduction. Or I want to build this portfolio because I want to benefit the community. Okay, can anybody tell me if I want to build a portfolio, ESG portfolio, that I want to benefit the community what kind of a method I can use? Positive or negative screening, or both? Is this question too difficult? Okay, my question is, if you want to build a ESG that is a portfolio that is specialized in the community, okay, community, benefiting the community, okay, then which approach, screening approach, would you tend to use? Positive or negative or both? If you want to build a ESG that is specialized in the communities one, which one you think is more suitable? Positive, negative, or both? Can anybody tell me? Positive screening, okay, good. Anybody else? Okay, positive, both, yes, both, yes, both, both. Okay, so number one, because benefiting the community, right? So number one, can you have tobacco? Can you have BAT? No. Okay, so if I want to benefit the community, number one, I will exclude BAT. Okay, then I will also exclude what? Carlsberg, Heineken, and Genting. Okay, so all these exclude. Then next we come to inclusion. Okay, positive now. So positive, what can we do? We will include what? Consumer stocks. Okay, the inclusion is very easy. The exclusion is something that you need to identify first. Okay, after you exclude, then the inclusion, oh, you can include banking, I can include consumer stocks, I can include telco, I can even oil and gas, I can include, okay, because if let's say the oil and gas, if it's producing petrol, is you have to use the petrol, isn't it? It's just that the pollution may cost a few generation, but then you still need the petrol. Okay, so you can include things that you think that will benefit the communities. Okay, so then technology, you can include all this. Then number three, make an investment plan. Okay, so now you got all this approach already. So now you will build a plan. The plan is that you must have diversify. That means across different industries. Then you must also have a strategy, is that when the price go lower, you may want to do dollar cost averaging, or you may want to buy and hold. Okay, all this. Then after that, step number four is the execution. Okay, so you can build a portfolio based on individual stocks, or you can base on ETFs, or you can base on unit trusts or bonds, or combination of all of them. Okay, so if let's say you just want to build from the Bursa stocks, then it will be purely from the Bursa. But however, if let's say you are looking at a big portfolio that where you have some ETFs, some unit trusts, okay, very simple. Okay, so there are also another rating agencies that you can look at, which is Morningstar Malaysia. Morningstar Malaysia has sustainable investment funds. So you can look at these ratings. Oh, these funds are 4-star, 5 stars. Wow. Okay, then you see how many stars. Here I also have this thing. I opened up my browser. I wanted to talk about it. It's the National Energy Transition Roadmap, NETR, charting a path to sustainable energy landscape. So this one I will share with you so that you can read it up. So you can see what we are doing as a country. Okay, so our commitment. Okay, so it's a net zero carbon by 2050. So commitment to sustainability. So we want to achieve net zero emission by 2050. The plan is to comprehensive and targeting at renewable energy. So we will gradually increase renewable energy from 31% by next year, 31% by next year, I'm not sure whether we can achieve it, to 40% 2035 to 70% renewable energy. So which means that majority of us, we have to go green. drive an EV car. Okay, well, I will not. For me, I haven't bought an EV car yet, but I'm seriously thinking of buying a plug-in hybrid. At least you fulfill the objective. Okay, if you buy a plug-in hybrid, means that you have dual tank. Okay, you have a charging tank as well as a gas tank. So at least you fulfill it. So you can switch. So if let's say you are driving in the cities, you just use the electric vehicle. And then when you are driving on the road, suddenly your electric vehicle, no batteries, you can switch to the petrol and then you can continue to drive. Okay, so recently the BYD come out with this model. I cannot remember what's the name of the model, and it's a plug-in hybrid. And then I think the Cherry Tiggo also have this kind of a plug-in hybrid, but it's not launched yet. And then a few of these companies, they are launching with plug-in hybrids. And Toyota also have a plug-in hybrid, which means that you have dual gas tank, not dual gas tank, I mean one gas tank and then one charging tank, whereby you can charge both. Okay, you can pump in the petrol as well as charging, so that your car can run in either one. You can switch easily. So when you are running out of petrol, you switch to EV. When you are running out of battery, you switch back to petrol. So very convenient. Okay, so at least you can go for this kind of a plug-in hybrid. Okay, infrastructure is not ready in Malaysia in many places. Yeah, so that's why you get the plug-in hybrid. Also, government wanted to protect. Yes, definitely, we cannot open 100%. You know why? Already the European countries, they are seeing the problem of opening 100% to the Chinese EV car. It's a big problem. It's going to be a huge problem. So we have to protect the local automobile industry. Okay, otherwise, we will see the problem that what the European countries are facing now. And then, yeah, government should prolong the EV road tax incentive to promote. Yeah, yes, prolong and then to have a slow transition, because currently the EV cars are expensive. So because of the protectionism. So then we have another form of subsidies, which is the road tax subsidies. I think that is good. So we should prolong that. Yeah, I think that would be good. Slowly transition, okay? Okay. Yeah, until 2025. Okay. So let me see. Okay. So then if you can scroll down, we are looking at renewable energy, and then we are looking at another thing. Do you know what is net zero? We say net zero means what? Does that mean that we have zero carbon? How can we achieve zero carbon? Every day we have aircon, we have the car we need to drive. All these carbon dioxide are emitting every single minute, seconds. So how can we have zero? What do you mean by zero? Can anybody tell me how to achieve that zero thing? Can anybody tell me how do you get the zero? Anybody? You see this vision, everybody can say it out. Oh, net zero 2050. Everybody can say it out. But do you know the mechanism? How can you do that? Anybody? Sell carbon credit to other countries. This selling carbon credit is not solving the problem. You are just passing from one to another. You have a piece of a great forest, and then where you can sell the carbon credit, but then the other one, you are still polluting the environment. So selling the carbon credit doesn't solve the root problem. Okay, but how do you solve the root problem of this carbon? There is real carbon dioxide into the atmosphere. There is a real carbon dioxide into the atmosphere. How do you solve it? How do you remove it? How do you control it? Plant trees. We have to reduce as much as we produce. Good, reduce. We have to plant trees. Plant more trees, yes. So there is also another method, is this one. Carbon capture, utilization and storage. Okay, so this one, not many people have come across this one. So do you know that there is a special equipment that can capture the carbon dioxide and remove the carbon dioxide from the atmosphere? Do you know that we have this? Okay, so these are all government public effort, because no individual private companies would like to do this on their own. Who give you the money? Who give me the money to build these things and then to capture? So it has to be an NGO. Okay, so these are all government effort. Yeah, it will cost billions of dollars, a lot of money. So definitely belongs to the government, whereby they will come up with the money to come up with the equipment, and then this huge big equipment is to capture the carbon dioxide. Yes, yes. Okay. Many of these developing countries, not developing countries, but developed countries like the Switzerland, northern European countries, the EU, the European countries, the North America, Canada, US, okay, Australia, they are all doing this. Okay, Malaysia, we have already started to do that. Maybe in Sarawak, and maybe in KL. Okay, so I saw the other day, there is one equipment, okay, in Sarawak, that they are doing that already. Okay. In oil and gas, they are they are using, yes. And the equipment is, yes, a lot expensive equipment, yes. Okay, so it is already doing that, but it's just that not fast enough to capture the carbon dioxide. So, because every single day we have aircon, unless you tell me you don't want aircon lah, you are not going to sacrifice your aircon. So then if we are going to have aircon, then we should plant more trees. Okay, we have to plant more trees so that we can absorb the carbon dioxide. And then if let's say you are still driving the petrol cars, then plant more trees, okay? Because we can't capture the carbon, then at least we plant more trees. In our effort, we can do that, okay? Okay, so small part here, okay, construction. So this is how you construct, okay? Your investment goal, whether you go for long-term, normally it's long-term. ESG portfolio is for long-term. And then the risk management, you diversify across the different sectors and the asset classes to manage the risk, okay? And then there are certain sectors that I've mentioned that maybe you may want to exclude or include into your portfolio, okay? And there are certain asset classes that maybe you want to include or exclude as well, okay? So, okay, when we come to the asset classes, right, can anybody tell me what are the asset classes that you can think of for ESG? What are the asset classes that you can think of? Besides the equities, what else can we have as an asset classes, as a form of an asset class? Anybody? Bond, yes. Okay, so the ESG, the green bonds come into the picture. So we must have gold. Okay, gold. In the sense is that if you were to ask me, is gold ESG thing? I would think that gold, because it's a mining. Anything to do with mining is not ESG friendly. But however, it's if you are looking at a form of a diversification, we can. Okay. There is also another way of looking at the cryptocurrency, because cryptocurrency is a digital assets. So digital asset doesn't involve mining activity. So probably you can include the kind of a digital assets into your portfolio as well as a form of a diversification across the different asset classes. Okay, so definitely bonds, equities, currencies, digital, and then commodities. Okay, so diversified. You can also hold the goal in terms of the investment account. So you don't have to buy the real gold, but you can also invest in the gold investment account, like the CIMB, the Maybank, and also the public bank. They have the gold investment account. It's very simple. Okay, you just Oh, crypto mining takes a lot of energy. It's not great. Oh yeah, that's right. Okay, crypto mining is not. So maybe other digital assets that doesn't involve mining. Okay, because they are what is the name for this? There's a name for. There are different categories. One is the stake. What stake? Okay, there is so in terms of digital currency, you also have other category whereby it is not mining type. Okay, paper gold. Yeah, that's right, Lily. Paper gold. Yes. Okay, so you can invest in the paper gold as well. And now currently it's very interesting to look at the gold because they are now at the historical high level. And then if they are able to break above that 2,400, 2,500, it's going to be very bullish. Okay. Anyway, it's a long-term investment for gold. Okay, so then you have ESG asset allocation. You may have 50% in stocks, 30% in bonds, and then you may have a small part, maybe ESG EFTE in ETF 20%. Okay, so your ESG can be in stocks, can be in bonds, and can be in ETFs and funds as well. So which means that your asset classes can also include your ETFs and funds as well, unit trust. Okay. Okay, then your selection process is by positive and negative, and then you monitor the performance. Okay. So then the challenges is that there are many hurdles. Okay, so the challenges is that the data, always the data is the problem because there are so many rating agencies, there are so many organization body to oversee the principles of ESG. So you do not know sometimes too many people to report to. So there is a such as like a confusion stage there. So then you need to sometimes to select the reputable ones. The rating agency, you select the reputable ones, and then you also combine with your own observations and your own research. Then you come up with your own analysis. Okay. Then, okay, now we go on to the ESG, the ETS practice here. Okay, so here the ETS practice, I'm going to share with you this. This one is from Bursa Academy. So can anybody tell me if you are already registered the member? Okay, so I log out first. Maybe I log out first. Okay. So anybody, okay, register. Okay, so who have not registered with this Bursa Academy? Who has not registered? Othman. Okay, so it's very simple. You have to click Bursa Malaysia, and then under Bursa Malaysia, you click Bursa Academy. Okay, under the Bursa, and very good. Okay, so for those of you who have not, right, it's a very simple simulator. Okay, because this simulator can allow you to do paper trading. So if let's say you learn all these interesting ideas, okay, from me about ESG, and then you want to build your own ESG portfolio, but you want to do paper trade first. So this is a place for you to come to. Okay, so you go to the Bursa Academy, and then you register first, and then you click the simulator here, equity simulator. Okay, you click the equity simulator, then you log in with your username and password, and you come to here. Okay, so then this will be, you are given with the 100,000 of a paper money. Okay, 100,000 is good for you to invest already. So then you can start to invest with the ESG team. Okay, so then you are looking at the portfolio. I will normally construct a portfolio like this, watch list like this. Okay, I have a dividend portfolio, I have a technology watch list, I have a property and construction watch list. So then you see I have this watch list here. Okay, so today these are the actions. The banks are doing well, very good. Then properties and constructions are mixed. Okay, properties and constructions are mixed, but however, Suncon is very super good. Suncon has broke the 5 ringgit region, become 5 ringgit stock now, from 3 ringgit stock to 5 ringgit stock in 2 months time. Amazing. And then you have the Gamuda from also construction from 5 ringgit, no, 5 ringgit, okay, from 5 ringgit to 8 ringgit stocks. Okay, so and that is because of the fundamentals behind, and we are looking at the book order. Okay, the book order is because of the projects that they are going to receive. So if you look at the Gamuda and the Suncon, right, not only they are looking at building the LRT, the RTS, and the Sarawak Borneo Highway. Not only that, okay, we are also looking at the data center as well. Okay, they are also building the data center. So all these are potential lucrative book order building on top of their existing book order. So currently, Gamuda already have 25 or 26 billion of the book order. So if you to see that they are going to win the Borneo, the Sarawak Borneo project, that will add on to it. Okay, and then they already have some data center project as well. And then same thing as the Suncon. Okay, Suncon, maybe they have other projects like not only the data center, but also maybe the LRT or whatever. Okay, so all these are potential catalysts for the construction companies in the Bursa, Malaysia. Then we also look at the banks, okay, because the banks, as the economies are recovering, and then as all these construction works are doing well, isn't it you need borrowing from the banks? Okay, and then the properties, isn't it you need money to borrow mortgage loan to buy houses? Okay, and all this development. So the banks should be doing well. Okay, so the banks. And then you look at the utilities, okay, because the utilities maybe of the data center, and then Malaysia, we are going to be the Asia third largest data center, behind Japan and India. Okay, Japan and India is number 1, number 2. So Malaysia will be number 3. Okay, so you can see our position in Asia as a data center. We are already at third position now. Yeah. Okay, we are already the third position now. So which means that the kind of energy consumption, okay, yeah, energy consumption is huge. Okay, so and then so who are the beneficiary? The beneficiary will be the Tenaga. Okay, well, if you look at the YTL Power is also will be the beneficiary, but then they are supplying the power for Singapore. Because don't forget, Singapore consume a lot of energy because they are also the data center hub. Okay, so then you can see that YTL Power provide the energy. Currently, they are account for 30% of the power supply in Singapore. And then Tenaga will be supplying for the Malaysia. Okay, so we have this. And then, of course, we have others like biomass also providing the energy supply. So we have all these power supply producing companies that are involving and are capturing for the next few years. Because this data center is not like come and go. They will be here for 10 years, 20 years. They will be here for a long time. So then the power supply will be for 10 years, 20 years as well. It's not for a short term. Okay. So all these are the catalysts that drive these stocks up. Okay. Okay. Indonesia will be our competitor, no doubt. Okay. So yes, we do have. Okay. So here we are looking at the buy. Okay. Let's say you want to buy. Let's say you want to buy, what share you want to buy? We have a few more minutes. What share you want to buy? Oh, okay. Let's say I want to buy this one. Okay, so then this is how you're going to buy. You click buy, then this will come up. Okay, then you say, okay, I want to buy. How much? Okay, 10 times 100 is 1,000 shares. 1,000 shares. Okay, then you buy 1,000 share, 8,000 ringgit, and then you click buy. Okay, you click buy, then it will submit the order. So then you can check the order here. Okay, maybe I have to refresh my thing a little bit. Okay, so then I will check the order book. Okay, so it's very simple. Check the order status. Then it will say, okay, means it's done already. Let's see. Maybe it didn't go in. Okay, so you have to check again. Maybe I do it again. Let's say I buy this, buy, buy, I do again. 10 lots. 10 lots. Eh? 10, buy. Okay. Okay, click. So order submitted. Then this one, you see that order here, buy limit Q at 8.18, 818. Wow, this number is super, super lucky. Then you see queuing. Okay, so then if it's done, then it will be reflect in your portfolio. So under your equity portfolio, so then you can see that whether Gamuda is inside here. Okay, so these are the stocks that each time when I'm doing the ETS with you guys, I will buy one stock. Okay, so over the years, I have bought these stocks, 1,000 share, 1,000 share like this. Okay, so over the years, I bought these stocks. So then you see that some of the stocks are doing very well. For example, KGB, Inari, all this. Okay, very interesting. Okay, so any questions on this ETS? Okay, the important is that you have to practice. Okay, it's only when you learn something, then you practice it. Okay, otherwise you won't be able to capture the meaning of share investing. Okay, Indonesia, yeah, that's right. Okay, so any questions on the ETS? Okay, any questions on the ESG? Are you more familiar with the ESG concept? So when people ask you what stock to buy, ESG stock, do you know how to answer? How to build your ESG portfolio? You know how to do? You know what is a positive and negative screening? You know? Okay, very good, very good. Okay, so okay, let me see. I think I have also answered the Q&A session there, right? The greenwashing, everything, because it's my slides. Also, investment and share ESG portfolio, diversify. All these I have answered also in my slides. Okay. Okay, so I've addressed your questions. And then if you have any questions, you may type in the chat. Okay. Carmen. I think I've answered, because when I go through, I have answered all their questions along the way. And the Q&A question also answered already. So any other questions? Oh, limit loss. Oh, this one you can't. Okay, for this one you can't, because you can only do manual. Okay. But however, if let's say it depends on your platform. Okay, this platform they can't allow you to do the stop loss. The order type is just the limit order only. Okay, say for example, just now here, you can only do the limit order. You can't do the stop loss order. Yeah. So that's why, but it depends on which platform lah. Some platform they allow stop loss. And then how many stars prevalent risk has? Okay, just now I show you this thing, right? So you can refer to this and then copy and paste it. Okay, you can refer to that one. Should be able to get it. Okay, you quickly click and then you save it down. You should be able to check all the stars there. Okay. Yeah, Susilawati. Yes, thank you. Haslin, thank you. Okay. Thank you. Thank you. Thank you. Yeah. Carmen, you are mute. Now you are.
Okay, yep. So yeah, thank you so much, Pauline, for such a wonderful sharing. So of course, before we end, just allow me to